Hello and welcome, everybody. It is Tuesday afternoon, 4 p.m., a bit of an unusual time for SF Live, episode 117. My name is Kai Hoffman. I'm the CEO of the Soar Financial Group, and in a few seconds, I will be joined by Warren Gilman. Warren Gilman is the chairman and CEO of the Queen's Road Capital Group, where the Queen's Road Capital investment company is actually publicly listed. And we're going to talk about how and why they're publicly listed. We're going to talk about commodities, uranium and gold, but also silver, zinc, because they do have an investment in Adriatic metals. So we're going to touch on all of those. And I've prepared quite a few questions. I'm curious why they chose the public company model, and we're going to get to all of that. But also, before we do that, follow us on YouTube, follow us on Twitter, and make sure to leave a like, leave a comment, and let us know how we're doing. What do you think of Queen's Road Capital? What do you think of their model? And what do you think of our interview format, of course? So we want to hear from you. Now, let me switch over to Mr. Warren Gilman. And Warren, Happy New Year. Thanks for joining us. Really, really appreciate it.
Kai, Happy New Year. Hello to all my friends in Vancouver. And I'm looking forward to our chat over the next hour.
Next hour? We got 20 minutes.
20? We got a lot of ground.
We got lots to cover. Like, the rough idea is 20 minutes. If it goes really, really well, I think we could turn this into whatever we want. So I'm the executioner here, and judge execution, whatever you want to call it, right? So it's great to have you on, Warren. And we've chatted recently on a panel the other day. I think it was from Minds and Money. Correct me if I'm wrong. And we said, okay, we got to follow up. You have a really, really unique business model there with Queen's Road Capital. Why don't you start us off? Give us a 30, 60-second rundown on Queen's Road Capital before we dive into details.
Sure. And I'll have to talk really, really fast to cover everything in 20 minutes. So slow me down if you need to. But Queen's Road, public company, TSX listed. Caymans Incorporated. When I took over the shell, I moved it to the Caymans for tax efficiency. Mind and management in Hong Kong. I'm talking to you here live from my office in Hong Kong, where I've lived for the last 20 years. Probably the only mining engineer that actually lives in Hong Kong, which has been the case for about 20 years, which is a bit unique. I'm Canadian, mining engineer by background, as I mentioned, and almost all of my shareholders are Australian. So it's a very global platform, if you will. And we have very few Canadian shareholders, oddly enough. I think we're going to address that over the course of the coming year. But when I first did my first financing, which closed back in February, it was a friends and family round. I just went around to various friends, and I was fortunate enough to get the backing of not one, but 6 Australian billionaires. So they're the largest shareholders, and they dominate the register right now. But hopefully, Kai, after this broadcast, we'll get a few Canadian shareholders.
Working on it. German as well. Like, that's my heritage, right? I only moved to Vancouver 2 years ago, so we got a pretty international audience. With the time zone, though, I don't think they'll be tuning in live, because I think it's the middle of the night there. So it's 1 o'clock in Germany, so or in the morning. And is it 7 or 8 a.m. where you're at?
It's 8 a.m. just 8 a.m.
Oh, okay, so that's actually quite nice. Fantastic. We got lots of ground to cover, as you said, and for me, like, it is understanding the structure of Queen's Road Capital at first, like, and one great example I actually saw on Twitter the other day, and I could not find it for the life of me in preparation of this interview just an hour ago. It is the Berkshire Hathaway model. It is the fund versus the equity model, and I think the graphic was about if you would have invested $1,000 in 1967 into Berkshire Hathaway, your equity would be worth $4.3 million. But if Berkshire Hathaway would have been a fund with, I think it was a 220 model, then you'd only have $300,000 right now. So not really worth it. And in comparison, of course, you would have lost $4 million, right? So my question to you is, like, why choose the public company model, the route you went? Why not stay private or any of the other options?
Excellent question. And I was private for 10 years. My previous job was doing precisely the same thing for Li Ka-shing, Mr. Li, here in Hong Kong. And over the course of 10 years, I spent about 550 million US of his money on various assets. Private company and internal, no reporting, etc. And we just took care of ourselves. So that was efficient, but it's efficient if you have one decision maker and you manage things internally. Mining investment and funds, to my mind, simply do not coexist well. They usually have a limited life. I call it 7 years, 10 years, 13 years. To me, putting a time limit on your investment in mining assets just is a recipe for losing money, certainly not as a recipe for maximizing shareholder returns. And I'm all about maximizing shareholder returns. I don't want to have to look at my watch and say, oh, 7 years have gone by. I must now sell this asset. If you were forced to sell within a given time frame, you're not going to maximize return to your shareholders. Managing money for Mr. Lee, both while I was doing it and once we shut down CEF, I had lots of opportunity to start private funds, especially mainland money and Australian money. Lots of people wanted me to start a private fund. And I just don't like private funds. Private funds, as I say, have a time limitation. Usually the investors have a bias. We want you to look, if you're a Chinese company, we want you to look for copper for us. We want you to look for gold for us. If you see a niobium play, don't look at it. If you see a great polymetallic, don't look at it. We're not interested in that. I want to maximize in returns from my shareholders. I want to have the flexibility to look at any deposit, and I want to have the ability to buy it when I want and sell it when I want. And that's why we are a public company. People can buy the shares, people can sell the shares, they can do what they want. I'm going to apply my principles, my investment philosophy at QRC. I'm going to maximize shareholder returns. You can disagree with me or agree with me. And the one other thing I would add, unlike funds, there is no management fee, there is no performance fee, there are no fees. I'm a shareholder. The share price goes up, I make money, along with the other shareholders. So we don't have any of that slippage. Classic Berkshire Hathaway, but even more in terms of Berkshire Hathaway, in that I'm simply a shareholder.
Fantastic. And it's actually lots to follow up on. I should have taken a couple more notes because I easily 10 questions in what you just said, actually. Let's start with the decision making. Where does it start? Like you said, like before, and I think it was probably off mic, but there are 5 major shareholders in the company, right? You're one of the bigger ones. So how does the decision making process work? Are you the appointed king of the castle, or like how does it work?
Very, very much, Kai. Queens Road, an investment in Queens Road is an investment in Warren Gilman. I originate the investments like I did in CEF. I structure the investments. I perform due diligence. I monitor the investments once we make them, and I make both the acquisition and the divestiture decisions. Myself, along with my friend and colleague, Alex Granger, who's president of the company that worked with me in mining investment banking for 10 years. And we do all the work. We present investment ideas to the board. So the board also acts as a quote unquote investment committee. But anything that comes to the board is with my and Alex recommendations. And ultimately we receive authority from the board. But make no mistake, investment decisions, the buck stops with me. And my Aussie friends are incredibly supportive. They help me with due diligence where they can. Obviously, someone like Andrew Forrest knows a lot about the mining industry, and I have a lot of people, but they're very helpful in terms of getting inside scoops, if you will, on various projects and finding the right people to talk to about them. But the buck stops with me.
Fantastic. Let's dive down also a bit deeper into the structure of Queens Road Capital, because you only listed as part of an RTO. It was almost in 2019. I'm just trying to think. It's 2021, right. So it's about a 1 year anniversary. So you really only launched recently. You're still a very young company. Run us through that process, and also, like, you're a Canadian, obviously. All your investors are in Australia. Why not list it on the ASX? Where did that TSX appeal come from?
Exactly, and it was a matter really of circumstance. Originally, when we started investing with the wind up of CEF, and we started investing privately, I took control of this TSX listed shell, and thinking we could probably use it for one of our investments. And my Aussie friends very quickly got behind the idea, and they said, let's not use it for one of our investments. Let's use it for all of our investments. We like the idea of raising capital from a broader shareholder base. We like the idea of this becoming a much bigger company. And we like the fact that we'll have liquidity and people can come and go. So they immediately put up their hands and said, we'll put money into that public company. And that's what became Queens Road Capital, which, as you say, closed its so far first and effectively only financing just in past February. So we've been doing this for 10 months now, and we've been doing it pretty effectively. We raised $84 million in that private placement round. And when I first raised the money, a lot of people were asking me, well, Warren, you're using the convertible debenture model, you're focused on that. What's the pipeline like? How are you going to spend the money? Do you think you'll be able to find suitable candidates? You're very selective about the quality of deposit. How long is it going to take you to spend this money? And I told them at the time, I said, look, I got a laundry list. I have no problem spending the money. It's just a matter of prioritizing so that I can put my money into the best ones in my laundry list. And sometimes I'll delay a little bit because the one that I really want isn't quite ready for me. But it's not because of for a lack of alternatives or opportunities. We can put all our capital to work. And certainly in the course of the last 10 months, I've spent 80 of that $84 million already, and we're going to raise more money. And
Oh,
you
okay. You're
mentioned,
taking away some of my questions already. That's a good nugget right there, and we're going to get back to that one. So, fantastic. Sorry for jumping in there, but that's definitely a hot take right there, and we're going to drill down on it.
I will just finish off by saying, and the ASX is one of those possibilities, because obviously we've got tremendous shareholder backing in Australia. Some very famous names. They may not be famous in Vancouver or Toronto, but these are literally household names in Australia. A lot of investors follow these names, and if we were to list on the ASX, we would get quite a following.
It sounds like you have put a time frame already behind it. So, and anything you can mention what the plans are, and how long does it take to do a list actually?
Early days on that, Kai. That's something that we'll certainly be looking at in the coming months. But like anything, if you're listing on a new exchange, it takes several months to do. I'm just saying that it is an option that we're looking at, and for obvious reasons.
No, it makes sense. It makes a lot of sense. And you mentioned a lot of things that we need to maybe dive into a little deeper. It's the convertible debenture model as well. Why are you running it? So I'm looking at it from both sides. I can see why you love it because it generates regular income for you. And now I'm looking at it from the junior mining company side that doesn't generate any income yet or any revenues. So it's just a cash drain, right? So let's run through the pros and cons a little bit. And I'd love to hear your side, obviously, and why you appreciate it so much. So
Yeah.
let's dive in there.
I love converts, and for the right company, the company loves converts. So it works. It works tremendously. You mentioned pros and cons. Frankly, I can only think of pros. From my side, it follows, Mr. Lee's requests in terms of managing his money. Don't lose my money, rule number one. And you must give me a dividend at the end of every year, rule number two. And I don't care about the cyclicality of the mining industry. I don't want to hear about your problems. I don't want to hear about a problem at a mine. You pay me a dividend at the end of each year, Warren, and then hopefully you also tack on equity returns on top of that. Converts give me that, and they gave Mr. Lee that for 10 years. Now, from the issuer's perspective, why would an issuer, and I tend, as you quite rightly point out, I focus on companies that are in development, either in exploration or development. the great thing about the convert model is that only the best companies that have fabulous deposits can really carry a convert. These are things that we know will become mines. We know will eventually receive project finance from banks, be constructed, and be built. So we're simply advancing the timeline of that project finance by maybe 3, 4, 5 years by us providing them some capital in advance of the banks providing them a lot of capital. And they get two other benefits besides that capital. Obviously, what CEO doesn't like the concept of issuing equity at 130% of his current share price, which is what he's doing? Every CEO thinks his share price is too cheap. Well, rather than doing an equity issue at a 5 to 10% discount and then paying 5% commission on top of it, so you're looking at maybe a 15% discount to the market price, issue a convert with me, pay 0 commission, and issue your equity at a 30% premium. You're already up 45% on the value of your equity by doing so. Point number 2 is we often, and in the case of our 3 investments that are currently outstanding, have voting alignment with management. When I invest in a company, I'm not only investing in the ore body, I'm investing in the management team. I trust them and I back them. And that means giving them my votes under certain circumstances, especially in the circumstance of a takeover. And lots of CEOs and boards, especially who have high quality projects, who may be the subject of unwanted suitors, like the concept of having those votes in their back pocket. So again, a great benefit to the company.
Yeah, it makes a lot of sense. And how does your convertible debt, like when it comes to project financing time, fit in with the bank debt? Like, because usually bank wants to be first in order of repayment, of course. So where do you factor in there?
And they are always first. We are always behind project finance. The great thing about our converts is they allow for project finance. And as soon as project finance comes in, people can take us out or they can leave us in if it makes it easier for them and makes the cost of capital overall cheaper. But we are there to help them build this mine. And so project finance is a great thing. We do everything to encourage it. We certainly don't stand in the way of it.
Fantastic. No, that's great. Okay, that takes away a bit of my fears, of course, right? As a junior mining investor, debt never looks good on a book of a company that doesn't generate any revenue, right? It's usually
These are companies that have fabulous ore bodies, that management understands, that they have the faith that this is not a promote. This is a real thing. I am building a mine. It might be the early stages. You know, you look at ISO. ISO, we invested in August. We're up 300, 400% on that investment. And it's a bunch of drill holes. They haven't even issued a resource yet. And yet it's a mine. It will be a mine. And management understands that they're very able to carry a small coupon on a convert because they have a mine in their back pocket.
Yeah. One thing you mentioned is the rule number 2. Mr. Lee's rule number 2 is pay me a dividend, right?
Yeah.
So where are we in that cycle for Queens Road Capital right now? Because you haven't announced one yet.
We haven't announced one yet. We're only 10 months into our closing our first financing, and we're probably 2 months past closing our third investment, which we closed on December 1 with London listed and Australian listed Adriatic. So we are getting there, and it will happen certainly sometime this year, hopefully sooner rather than later, but we are already within 10 months of launching. We are a cash flow positive company where our income from our debentures significantly exceeds our burn rate, or the cost of running this office, which is the only office Queens Road has. And so since we are now cash positive, we are getting to the point where we can declare our maiden dividend, the first of many regular dividends. We just would like to receive a couple of those payments. They're quarterly payments or 6-month payments. Let's get them in the bank, and then we can declare our dividend.
Fantastic.
But it's
Fantastic. All right, I should have led with that question though. Like in the case of Nexgen, actually, you sort of diverted from the just pure convertible model because you bought also $15 million worth of straight up equity. Is there why did you do that? Run us through your
Yeah,
logic behind that.
and that's a great question, Kai. And it's really just a matter of history. The last round we did with Mr. Lee in 2016 on the converts, which were the second converts that I structured for Nexgen and Mr. Lee, that was a combination of effectively 50% converts, 50% equity. We followed that model when we expanded the facility on our first investment with Nexgen in April. It's not something we would normally do, but the Nexgen converts are such great securities that I was more than willing to do it. And it's paid off. The equity since we purchased it in April or May has doubled. So we've done pretty well on that straight equity. But you're quite right. It's a small divergence from our normal model, but quite willing to do it in this case.
Let's talk about the companies for a second. Nexgen and ISO are obviously in the uranium space, and they're quite well known over here in Canada. I'm not sure what we like how deep we have to dive into there, but you obviously believe in uranium and the uranium market. So give us your quick cliff notes on uranium and your opinion on it, and why is the investment the right one at the right time right now?
Well, both Nexgen and ISO are extraordinary deposits. Nexgen and Arrow in particular. Arrow is God's gift to the uranium industry on planet Earth. It is an industry-changing deposit. We talk about disruptors like an Uber. Well, Arrow is the Uber of the uranium business. It's simply going to disrupt the industry. It's going to throw off tremendous cash flow. It's just I'm a mining engineer. I've been in this business for 40 years. Rarely do you see a deposit of that quality in a safe jurisdiction like Saskatchewan. And when you have an opportunity to get exposure to that, you grab it with both hands. So that's enough to say about Nexgen.
So, can I jump in for 1 second? So, is it a lucky coincidence, or that it's uranium? Could it have been anything else?
Yeah, we receive these things and we take them in whatever commodity they are. But I hope to make investments in similar ore bodies in any commodity, and we're commodity agnostic. One of the great things about the mining business that if you've got a great ore body, it really doesn't matter what the price of the commodity is. If you've got the world's lowest cost one, you're going to make money whether the prices are up or down. Obviously, you want prices to go up, and the supply demand fundamentals of uranium are stacking up very well as we get into this decade. So that's it's always good to have a wind at your back rather than a headwind. And I think we've seen that with the uranium equities over the course of the last 3 months. But at the end of the day, under the rule of number one of don't lose shareholders' money, anything we invest in, we're going to make money. It's simply a matter of how much.
Okay. So I cut you off before we got into Isoenergy. Let's continue there and see what the highlights are and what attracted you to it real quick.
Well, ISO is incredibly attractive for its simplicity. It is a very high grade ore body in the eastern Athabasca, proximate to uranium mills that are already operating. And so it's simply a simple matter of mining it and shipping it to someone who's operating a mill. So that means lower capex. It means very short time for permitting. It means access to increasing uranium prices on a short time frame. It all makes perfect sense.
Fantastic. And do you think Nexgen is going to buy ISO back in at one point? Does that make sense? I'm just thinking.
Well, that's a question. That's a question we'll leave for Nexgen.
Gotcha. Adriatic metal, it's a bit of a switch in terms of commodities because it's pretty much a hodgepodge of everything, right? A polymetallic deposit, lots of silver, gold, lead, zinc. What attracted you to that? And run us through your investment highlights there real quick.
Again, incredibly high value deposit. One of the things that intrigued me about it was that at spot prices, about 50% of the revenue is precious metals. and of that, mostly silver. Again, I like the supply-demand dynamics of silver. It's always great to have some exposure to precious metals, especially in this COVID environment. And it's not easy to do as an investor to buy an investment in precious metals without paying a huge premium, especially over the course of the last 9 months. And we've done so through Adriatic. Very rare, again, that you have an opportunity to invest in a project that has an IRR that exceeds 100%. We're talking very short capex, very small capex, very short timeline to coming into production, very quick payback, very high returns. So again, an ore body that fits our model beautifully, and that will be a significant dividend payer when it comes into production.
Fantastic. And we had Paul Cronin a couple times on the program already as well, so our viewers should be familiar with the company. And
Paul is a tremendous manager. Hats off to him to be an early mover in that part of the world, and he's done a tremendous job.
Yeah, he's moved this project along so quickly, unbelievable. So he's especially there in the area. So tipping my hats to him as well. Let's look a bit in the future as well. Like you said you had a long list about a year ago when you started Queen's Road Capital of projects that you were willing to invest in. How has that changed over the last 12 months? Gold went up, silver went up, copper went up, zinc went up. Like, how has that changed? What is left?
Yeah, everything has gone up, which, in some respects, obviously, I wish that this great mining bull market had occurred 2 years from now after we'd raised $500 million and got set. The good news is that we weren't shy about investing the capital that we had on hand, which was the $84 million. And we've deployed that successfully in companies that are in the very early stages of this bull market. The one change in focus for me, Kai, over the course of this 8 months has been precious metals. When I did the rounds in Sydney back in October of 2019, I was probably a little bearish on precious metals. I grew up in a gold mining town in northern Ontario. I've been a gold investor all my life. So I have a bias to be bullish on gold, but I was bearish back in October 2019, simply because we were in a rising real interest rate environment. Treasuries were moving up. We all saw that rising interest rates were going to put a squeeze on gold in the next 2 to 5 years. And that's a big headwind for gold to overcome. That all changed in February with COVID, government expenditures, economies shrinking, and the fundamental environment for gold and precious metals changed, in my view, 180% as a result of that. And so, as I wasn't particularly spending any time on gold projects a year ago, now I am.
Fantastic. Okay, yeah, October 2019, completely different environment. Everybody was very, very bearish. The mood here in town was horrible, actually. Like, it wasn't a lot of fun.
And for good reason. And now they're bullish for good reason.
Yeah, no, it's fantastic. So, but you haven't answered directly my question. So, how many projects are left on your list out of that after the price spikes?
Yeah, almost all of them.
Okay.
Are left on my list. There's only a few that have gotten way ahead of themselves. They'd still be on my list, but I'm, to use the basketball analogy, I'm hanging around the hoop. Whenever you make an investment, besides the quality of the ore body, the stars and the moons have to align, because the issuer has to be comfortable with the price they're issuing at, and I have to be comfortable with the price that I'm buying at. Sometimes you say, guys, I really want to make the investment, but clearly now isn't the right time, either for me or for you. And you have to manage those. So there are probably a couple of investments on that laundry list that remain on the list, but I'm hanging back and saying, guys, I can't do it right now. Let's see where we are 6 months from now.
Yeah, no, and we've seen it Orin Inc. and you might not know that, but we track all the financings in the junior mining space and companies below 1.5 billion in market cap. And one thing we've noticed, of course, last year we raised 5.5 billion Canadian dollars for our sector, right? In that group. So, are you competing with that equity now? Is it getting more difficult? Like, I'm not involved in your negotiations, obviously, but do you get more pushbacks to, well, I don't need your convertible, like being a bit arrogant and cocky, right? But I don't need your convertible, I can easily do a bought deal with one of the banks right now.
Absolutely. And, over the course of 10 years at CEF, generally speaking, bull markets were times for us and other private equity to step back. You don't fight the Fed. You don't stand in front of that freight train. People can raise equity at cost of capital virtually nothing. That's a time for private equity to sell into those rallies. This one, Kai, interestingly, is different. And I think it's different because our industry, has been starved of capital, not for 2 or 3 years, but since 2008. It's been starved of capital for 12 years. And so there is an abundance of good quality projects that still require a lot of capital. And for the best quality projects, the ones who understand the benefits, as I mentioned earlier, of voting alignment, issuing their stock at 130% premium, and understanding that they have an ore body that can carry a convert, those management teams still understand the benefit of doing a convert with Queens Road Capital, as opposed to just slamming the market and hitting them for another 30 or 50 million dollars and diluting their existing shareholder base.
Yeah, no, you'd be stupid to turn that money down. You got qualified engineers, rockstar team behind Queens Road Capital that you'd be sending away. So I fully understand that, right? Quickly, I have two more questions, and one of them is about valuation of Queens Road Capital, right? So you're trading roughly at 200, let's say 205 million Canadian dollars. That's, I don't know, 175 million US, 180 million US. Total investments, including cash, is like 115, just rounding it up a little bit. So you have a premium already in the market. How would you value yourself? Like, where would you put the valuation? Like, what's a fair value for you?
That's a great question, Kai. Everyone has its view, but it's relatively easy to value Queens Road. You have the value of all of our investments, which are to date publicly traded. In future, we'll also be making investments in private companies, so it'll get a little bit tougher. But right now, it's very straightforward. You have the value of a converts, and we all know the value of a convert is composed of basically two pieces: the debt component and the optionality, which is traditionally valued on a Black-Scholes methodology. So you can come up with a theoretical value for the option value on those converts. Then there's the cash that we have on hand. So add it all together and you get a net asset value for the company. Then you would add a premium for the platform being there in place, ready to invest in a very tax efficient way. Then you have the dividend on top of us. So a lot of companies, you look at Canadian banks and they largely just trade as yield pieces, or you look at REITs, the old REITs in Canada, they're yield plays. And then finally, added optionality in terms of management's ability to find the next great investment that is going to give you really good returns. You add all that up and you say, what am I willing to pay for this? And I think the market's done a pretty good job over the course of the last 6 months in putting a value on that.
Fantastic. No, that's a great answer to my question. And we got to run ahead. Like, if you noticed, I've let it run a bit longer than 20 minutes because I'm tremendously enjoying the conversation, obviously, right? And there's so much knowledge to be had. Let's talk quickly about cash on hand, $5 million. And you're generating roughly $3.5 million in revenue per year. That doesn't leave you a lot of room to do a big deal, right? What's the plan?
It doesn't, Kai. And we also have, as I say, we put 15 million US into Nexgen shares 8 months ago, and those are now worth more than 30 million US dollars. So, cash and marketable securities, if you will, is substantially more. But you're absolutely right. I have no intention of selling those Nexgen shares these days. So we'll probably be raising some money, and we have a lot of options with respect to raising money. But Kai, it's our objective to make this $1 billion company, not a $200 million company. We become much more capital efficient the bigger we are. Right now, as you say, we're generating about $4 million in convert revenue, and the cost of running the company is about $2 million. So that means we can send out $2 million in dividends and still be break even. When we get to the point where we have 20 million in income coming in and 2 million in running costs, I can send out 18 million. So not 100% more than my operating costs, 10 times more than my operating costs. We become much more capital efficient the larger we get. So we're going to get larger. The added benefit to that is portfolio theory. Diversification of your investments will reduce the overall risk of the platform.
Fantastic. All right, let me summarize what we just discussed the last 35 minutes. ASX listing in conjunction with a big financing. That's what I heard out of this. And I'm glad you kept your coffee in your mouth and didn't spit it all over the phone. So I wasn't making any stupid commentary there. So I appreciate that. Let's jump over to Twitter. We've got lots of questions in, and I really appreciate from the audience, and use hashtag AskQRC for those questions. And you mentioned, or I'm just going to jump right in. And Netsum's asking, you mentioned that you're two term sheets out with gold companies, and just asking for an update there, of course, without naming any names or anything. But how is that progressing?
Yeah, these things take a while. As I said, the stars and the moons and the planets all have to align. We have to get to the point where we're happy with prices. And we're still looking at not only those two, but there's probably been a couple of more since. So as I mentioned earlier, we are looking at potential precious metal investments. We'll see how they play out. The next one might be precious metal. It might be something else.
Okay. Any jurisdiction? Any hints?
Yeah, we're looking everywhere. It's pretty broad. It's a broad list.
Okay. No, fantastic. He's got a second question. It's a timeline for the TSX uplisting, because I think you're on the venture right now. So is there a plan, and is that going to be in conjunction with an ASX listing or standalone?
And we will certainly graduate to the TSX. That's in the TSX's hands. We already qualify. So I'm just waiting to hear back from the TSX to give us the thumbs up. So it will happen. But unfortunately, not under my control. It's under their control.
Yeah, there's a massive backlog. So we've been hearing that left, right, and center. So I think there's like 5, 6, 7, 8 IPOs in the pipeline. They're just waiting for approval. All right. So let's hope lots happen before Easter. Favorite commodity outside of uranium for 2021?
Man, that's a great question. It doesn't necessarily relate to Queen's Road, as I say. Because I'm going for my favorite ore body as opposed to my favorite commodity. But I must say, gold's looking pretty good in this environment.
Okay, perfect. Just a couple more questions. So any timing for next round of financing? I think we discussed that mostly, right? Agnostic minerals. Does that include rhodium and tin?
Absolutely.
Interesting.
It includes anything. When the biggest investment I made for CEF was buying the Niobec niobium mine jointly with Temasek out of Singapore, Sovereign Wealth Fund. And there are only 3 niobium mines on planet Earth. 3. Most people did reject the investment opportunity when it came to on their desk because they didn't know anything about niobium. I keep an open mind and I learn about these things. And if it's a great investment, we won't hesitate.
Okay, so that really fits with the whole narrative we had. It's like if it fits, if the ore body is great, it doesn't really matter what it is.
Exactly right.
Fantastic. Warren, I don't think I have anything else to add. Maybe you can put a bow around everything we just discussed and summarize why QRC is a great investment and why you think we should follow you into the future.
Well, thanks, Kai. I appreciate that. And before we finish off, I said I'd make a shout out to Peter Ackerley at our favorite Mongolian gold company, Erdene, who you did an interview with just a couple hours ago. So I had to shout out to Peter. Keep doing the great work that you're doing. It's looking great. I've been a long time shareholder. QRC is just getting started. We had a market cap of $1 million, $1 million when we took over the shell back in the summer of 2019. We're now well over $200 million, having raised $84 million from friends and family. No leakage, didn't pay a cent in commission to anyone. We have executed on that business plan. We have spent 80 of that $84 million, spent it effectively. Nexgen investment has doubled. ISO investment has tripled. We have income coming in that covers our operating costs. We are cash flow positive within 8 months of listing. This is going to be a $1 billion company. Doesn't have almost no shareholders outside of Australia and Hong Kong. So it's very early days for North American investors and European investors. If you come in now, you are coming in at the beginning of a company that is going to be around a long time, paying dividends a long time, and working hard for shareholders to maximize your investment with a management team that's been around and knows what they're doing.
Fantastic. Warren, I just thought of like 3 more questions to follow up on, but we got to cut it here. Maybe one last, I got to squeeze it in. COVID, you mentioned it yourself. It was good for our markets. How has it hindered your travel and your due diligence?
Well, it's hindered my travel tremendously, Kai. I'm here in
but part of the due diligence process, not just leisure travel to Bali, right?
But you're absolutely right. Nexgen and ISO were easy. Projects that I've been to several times, management teams I know extremely well. Due diligence was simple. Adriatic was more difficult, in a country that I have never been to this day. But thankfully, my colleague Alex Granger bit the bullet, did the quarantines, went to site, and we will always do that. We're looking at several things right now in Australia. The problem with Australia is neither Alex or I are allowed in the country. So it certainly impacts hands-on, boots on the ground due diligence. But as I mentioned, we have lots of friends in Australia who we know and trust, and we can get them to visit projects. But it's not my preferred route. I want to put my boots on the ground, as I did with every single investment we did with CEF and every single investment at QRC right up until August of this year. So we have to work around it. There's no doubt about it. Not preferred outcome, but we can manage it.
Fantastic. It's all about that gut feeling. Same for me here. So
it is.
Warren, I really, really appreciate it. It was great talking to you. As you've noticed, I didn't use the full hour, but I didn't stick to my 20 minutes either. So I really appreciate your patience, and thanks for coming on SF Live today.
Thanks for the opportunity to get the message out, Kai. Have a great day.
Yeah, you too. Everybody else, thanks for tuning in. Thanks for watching. Follow us on YouTube. Follow us on Twitter. This was Warren Gilman. He's the chairman and CEO of Queens Road Capital. Really appreciate him coming on.